Good morning, everyone. Assalamu alaikum. Hope you can hear me well. And welcome to the Ship Finance and Trade Conference. Hope you've been enjoying so far. I have the great privilege of being in the middle of the pack, so hopefully no one is too sleepy to understand what's going on. Today my presentation is Shades of Green, a conceptual approach to green asset acquisition. At Tomini Shipping, we have dry bulk carriers, primarily geared bulkers, and our focus currently has been how to make sure that any acquisitions we make follow a green agenda. So how I wanted to tackle the topic today is, what is a green asset? How do I get one? Once I have it, how do I finance it? And then how do I make sure I'm getting what I pay for? So what even is a green asset? Well, on a fundamental level, a truly green asset is one which would have zero emissions. But as everyone knows today, that's not really within our grasp. A different meaning of what is green as of right now is to say that you have different shades of green. For example, you have dual fuel new buildings. Could be an LNG dual fuel container ship, for example. Or you could have a dual fuel ready new building with an ammonia notation from one of the class societies sitting here. A tier 3 super eco vessel or an older tier 2 eco vessel. All of these things and none of these things at the same time are all green assets. It all depends on the context. A shade of green of an asset really depends on the segment that you're working in. You could contend that within dry bulk, where we operate, there's no logic in paying much attention to green fuels or future fuels today. We don't have the infrastructure to support green fuels on the ship or on shore within geared bulkers today, because the segment relies heavily on its flexibility, because we service the most remote ports and the widest range of cargoes. As a result, the name of the game for us is efficiency. You have to use tried and tested ESDs applied with fervor. That's what it means to be a green investor in dry bulk today. Focus on holding on to your eco tonnage and spend good money making that tonnage as efficient as possible. On the next point, how do I acquire this green asset? Well, you have three options. You can order it, you can buy it, or you can convert it. The first two are very self-explanatory, right? You go to the new build yard, you order your dual fuel new building, very, very expensive today, historically, but also in terms of when you're ordering a dual fuel, $8 to $12 million for LNG or ammonia or any of these fuels, and you're not even sure if you're going to burn it today, or in the near future even. On the other side, and what most people are thinking about when they think about investing in shipping today, is to just buy it from the second-hand market. Well, this is very dependent on your specific sector, of course. I mean, dry bulk and tankers have fallen off in values in the last 7 to 8 months, whereas container ships are still riding high. So it's difficult to ascertain where you are in the cycle, but once you have an understanding, going for good eco tonnage is always a good option. The third, and which is my favorite option, is the counter-cyclical approach to green investing, which is convert it. Buying something non-green, where you're looking for the discount that's always present in a market where there is some souring in sentiment on a specific sector or type of investment. You put your discounted savings back into the vessel using some low-hanging fruit-style investments like paints, ducts, or software upgrades, and you improve the optics of your cheap investment. Obviously, this kind of style of green investing is inherently riskier and has a shorter investment horizon, but that's why there's value in there to be extracted. So now you've decided what kind of green asset you want, how you're going to acquire it, you need to pay for it. How do I finance it? Well, you have a few options. Within the region, again, I'm not officially speaking on any company's behalf, but National Bank of Fujairah, NBF, they're a very good bank in this regard within the region. At Tomini, we've worked with them and found them very knowledgeable, helpful, proactive, productive in this regard, from new buildings to secondhand, even vintage secondhand. You can look to the east. Chinese lease finance is very good in this regard, and for the longest time, they have been colorblind in the best way when looking at green. As long as the deal works, it works. And then obviously, if you have something extremely green, like some kind of dual fuel new building with a charter back, looking west is always a good idea, especially Germany. One thing I did want to mention, and not being a finance man, I hope that I can say what I would like with impunity. I'm not such a big fan on the green finance, as it were, in quotes. We at Tomini, for example, we've had no such luck with green-linked finance or green bonds. Those companies which have, at least what I've seen in the public sphere, achieved green finance, which has been linked to some kind of sustainability goal or milestone, have received a very token amount of benefit, maybe 5 to 7 basis points. So with regards to green finance, I think a lot more work has to be done in order for it to be useful or applicable to the private owners of the world. I guess with the finance side, I just want to mention that we shouldn't be intimidated by green or non-green finance when looking at these projects, and we should continue to focus looking at what works. Finally, how do I ensure I get what I pay for? You've done all this research, you've gone through, found your asset, found where you're going to get it from, and figured out how you're going to pay for it. You need to make sure you're getting your bang for your buck. Well, there's a few things. First of all, as I said, you have to do your thorough research just as we always have. The main thing that I think is different in this regard is engaging with stakeholders, and different stakeholders than we have in the past. In the past, obviously, you are very nice to your financiers, you take your charters out for dinner, and you make sure you're getting your charter hire. But today, especially with regards to green investing, you have to engage with your crew and your office staff. You have to make sure your crew and your office are always discussing, always talking. You can order a dual fuel new building with all the bells and whistles of today, but if you haven't engaged with your crew, if they don't understand why you're doing something, how you're doing something, how you want them to talk to your charterers and your ops team in the office, you're not going to get the full value of what you've paid for. And I mean, when you look at it today, you're paying a lot. With that regard, finally, I'd just like to focus on what matters, which is fuel efficiency. The basic concept we all understand: if I reduce how much fuel I burn, I save money, thereby producing a return on my investment. A simple calculation producing a specific number which both parties, owner and charterer, can then negotiate on to a hopefully constructive end. That's to say, environmental responsibility and economic viability aren't mutually exclusive. Quite the opposite. To finish off, I'd like to give a Tomini example, again, without guarantees and all going well. With this regard, without naming any names, of course, we at Tomini achieved this on one of our Cape-size bulkers for a multi-year charter. We guaranteed our charter improved speed and cons after the 10-year special survey of the vessel, which occurred about a year ago. During the dry dock, we fit ducts, we applied a silicone paint on the hull, an experimental propeller coating, as well as a multitude of software upgrades for the main engine and bridge, all designed to reduce fuel consumption by between 8 to 12%. As you can see, we have agreed the deal originally at 122% of the Baltic Cape-size index, minus the ADCOM, of course. And after the upgrades, we managed to convince charters to increase that from 122% to 128%. What this means is the charter accepted an increase in the index premium, and all the contracts remain the same, except we, the owner, apply a technical solution and expect a commercial compensation. A very simple approach to a very complicated problem. I've run out of time, but I hope that gives you a nice idea of how to approach this from a conceptual point of view. Thank you very much.